Right. Okay. Chapter 6 is on practice management. And again, quite a knowledge-based chapter, really and truly. It's just how we manage um, our, again, accounting practice and how we relate with our clients. And really within sort of good ethical boundaries in relation to fees and in advertising and things like that. So let's jump in. And again, I think a lot of this you can apply a lot of, as you would expect, common sense and being professional. I think the core running principle of being professional as a theme works well because it means that you can remain professional. And if you come from that place of being professional, you can always argue and suggest the issues to think about. So we're going to be looking at advertising and tendering for work, and you can just look in normal practice. You don't see us out there on radio telling people how great and how we can do a great job for nothing. No, it's a professional service. Talk about professional appointments and managing those relationships with our clients, and just discussing some of the more current developments in business practice management. Right. So again, like I say, we're really into this. This chapter really looks at running an accountancy firm and winning new business and setting fees. So some of the things that we're looking at is what the sorts of things and again, I don't think this is anything so dissimilar to what you expect in a standard tender proposal for any project. Requires, you are trying to sell yourself, but you have to sell yourself with some respect. And so it's not about saying you can do, but offering the lowest rate so you get the job by all means. Also, we're looking at the suitability of an advert and sort of the things we need to consider when setting a fee. And then, of course, we then come back to this question of engagement. We do see this question of engagement again, sort of prior to accepting a role or a job, engagement, and what happens when we have a job and we are continuing with the job, sort of the preconditions that we expect to be set in place before accepting an engagement. And there are sort of standard 3 conditions that we expect, especially in audit. An audit engagement. Typically, general engagements will require the scope would be the boundary, if you like. So, for example, it was a fraud. It really would be to do with, in terms of preconditions, it's just the fact that they were prepared to give you all the information that you needed, and then the rest would then be, of course, based on whether or not other reasons, in terms of whether or not you had the skill to do it or the resource to do it. So this starts off talking about the chapter starts off talking about changing auditors as to why you might have come to a point where you feel that, listen, that we can't carry on for whatever reason. And it's not always a bad thing. Sometimes a client grows and or acquires another firm and becomes a firm now that is dealing in has a much broader scope, if you like, and not just, and maybe working in a longer number of industries, as part of their acquisitions. And you, as in your current situation, may not be able to carry on, if you like, servicing them. And so that's one reason. But then here are a number of other reasons, of course. The size of the firm, if you might have stopped offering audit services, they might not be happy with your work, the company policy or rotation. So we talked earlier on that listed firms should, after 7 years, after 10 years, tender out the audit, although the partners should rotate after 7. But EU guidelines suggest that after 10 years, there should be an audit tender for a new set of auditors. And you might have disputes, but there are many reasons why you may wish to say enough is enough. Thank you. We've had fun. It's time to leave. So some of the things to think about when stepping down as auditors, again, like I say, it might just be simply to do with the fact that you just feel that, listen, we can't be your auditors. Maybe it might be to do with the fact that you're preparing their accounts and suddenly you've been working on their controls and now they want you to audit, which would cause the threat of self-review, that sort of thing. There might be some doubts regarding company's management. You might feel we can't work with these guys. There are issues here. Um, and then you have, again, there might be strategic decisions, if you like, that you might think this is not the best for us. We were not quite specialized in that area. But that's sort of something to think about. Just be aware of. Remember, again, this chapter is really about practice management. Tendering. So this is you asking or looking for a client, and we're just really looking at some of the issues. I mean, what is fundamentally tendering is just you're sort of going out there to quote a fee because you're trying to get some work. And of course, like I said earlier on, this still must be done within the context of the ethical framework that you are working in, and that's important. And so yes, you are. If you like, being invited to tender, but of course, again, there is a risk that you might not get it. This is nothing so different. There's nothing unique here. There's nothing here that's unique, if you like, to audit. It's just generally what happens with tenders, that potentially you might not get the job or get the tender. And that's quite normal. So, I mean, it's just to be aware. But again, like I've said earlier on, we will come back and talk about this idea of what's referred to as lowballing. The ethical thing is not to lowball in order to get the contract, and make unrealistic claims and promises to win the contract. I think last week we saw Carillon, an organization that was into construction and had been lowballing in order to get all these roles, and they just, when their costs exceeded their the potential fixed price, which did on most occasions, and then they weren't able to renew their funding, they suddenly had to they went into administration and they collapsed. So what you don't want is a scenario like that, and it's not professional, really. Right, so again here, these are just general points, really. It's just trying to really understand what's really happening here. So when you're going to relate with this client, it's trying to understand the size of the client. What's the expectation? You're trying to understand what their revenue is, what their business is. Are they thinking about a flotation soon, expansion, contraction? What is going on right now? Why us? What's happening with your previous auditors? What is their year end? Are you going to be really busy? Will you have time as the auditors at that year end? Do the auditors do the clients expect an interim audit followed by a final audit, or is it a longer final audit after the year end? How soon? What's the reporting deadline? What fee are they ready to pay? And really just trying to assess this client to see and what audit methodology are we going to be taking. Typically, a risk-based approach is important. Again, like I said, imagine this client of yours has now acquired a number of subsidiaries and you become the group auditor, possibly, or you might have to leave because now there'll be a group auditor. Key point here is that you now have to think about coverage, if you like, geographical coverage, deadlines, availability of information. So these are all points to think about. After all said and done, though, there is an argument, or there is evidence that this has not been a problem. That people tend to hire professional auditors by word of mouth, by references, and by good branding. I mean, people know, they almost come to you and ask you. It's rare that it's based on sort of amounts or fees, so to speak. We don't say, let's take the person with the lowest fees. No, people understand the quality of a good audit, and so good references and relationships between partners from one firm to the other recommend these firms, and that tends to be the the norm. So I guess the question here is, if you like, what are the benefits about tendering? So I always think of tendering as target costing. The fact here is that having this audit in effect will mean that, having to tender means that, of course, we are clearer, if you like, about what our costs are, how we intend to perform this work, make sure that we can compete efficiently, because typically we don't have it's a target costing system where there is a set price somewhat. We are price takers in that market. And yeah, ultimately that's kind of one of the probably the main thing there. We're more efficient. Now, of course, this means also that the companies that we're dealing with here will be trying to reduce their own costs and we can see straight away, we know, right, that audit risk is fundamentally based on inherent risk, inherent risk, um, control risk and detection risk. So ultimately what happens in the end is that we see a fall in audit risk. If your control risk is much better, is better, you have good internal controls, then of course there's the likelihood that you will have less testing, and therefore your costs of the external audit are cheaper. And that's kind of the point there. Yeah, and I think that's good. So it's good to sometimes have, of course, the really argument here is that having new auditors come in, it does mean initially, of course, it is difficult, because the first year of auditing is always very expensive for the client, because the audit firm is still trying to get to know your business. And so, unlike a firm that's been there for a while, there's economies of scale. They know you now. They know the risk areas. All of that happens with a fresh tender. But who knows? Maybe the tender price will be upset somewhat by the fact that there are many firms competing, so it might not be as expensive. But those are some of the advantages, having fresh eyes to look at the business. Well, some of the drawbacks, of course, like what I just said here. We have long-term relationships with auditors. So you kind of replace this long-term relationship with this dynamism and this fresh input, and so it could become about the cost of the audit, as opposed to the quality. And there's a time and the drama of trying to recruit an auditor that could take a long time, depending on the governance structure of the organization, because the audit committee will have to be involved as well in this process, and to look carefully at the recommendation of the directors so all of this takes time. Cool, great stuff. This is part 1, and we'll carry on in part 2.